It's Thursday, November 13th, and here's everything you may have missed in business and finance yesterday. U.S. stocks had a mixed day yesterday. The S&P 500 was just about flat, up 6 basis points, but under the surface, there was a lot going on. Smaller and mid-sized companies actually outperformed the big names for the 6th time in 7 sessions. That is a sign of broader market strength and good market breadth. The Dow was up 68 basis points, and it notched its second consecutive record close yesterday, outperforming the tech-heavy Nasdaq, which was down 26 basis points. Energy, software, healthcare distributors, and electric vehicles were weak. On the flip side, big banks, managed care, airlines, and apparel retailers were among the winners. A few corporate highlights: AMD was up 9% after it got a boost from positive Analyst Day takeaways. IBM touched a new record on quantum computing breakthroughs. Amazon, Tesla, Palantir, and Oracle all fell back amid valuation concerns in the sector. Coinbase announced it's moving its incorporation to Texas, and Waymo became the first robotaxi to provide rides on U.S. highways. On Running was a standout after it surged 18% after strong earnings. A handful of other names moved on earnings beats or misses, but nothing earth-shattering. In other markets, gold jumped 2.4% near its best levels. Oil dropped sharply, down over 4%, settling below $60 a barrel after OPEC predicted a more balanced supply next year. Bitcoin futures also slipped about 1%. Treasuries rallied, meaning that yields fell slightly, about 2 to 4 basis points. Generally, in terms of interest rates, the Fed is still sending mixed signals. Some officials want to keep rates steady, others are pushing for cuts. Right now, Fed futures pricing for December rate cut is a little more than 50-50. Labor market data looks softer, but we're in a data vacuum because key reports like October's CPI and jobs reports may never be released due to the government shutdown. We may get September national payrolls report next week, but December's meeting will still require the Fed to make a decision with incomplete facts. In mostly happy news, the government shutdown is officially over for now. The House voted on Wednesday to approve the funding bill that the Senate passed earlier this week, and President Trump signed it last night. The legislation will reopen the government after 43 days, the longest shutdown on record. The bill funds most agencies through January 30th and provides full-year funding for some programs like agriculture and military construction. It'll take a while to get everything back to normal, particularly at airports. National Air Traffic Controllers Association President Nick Daniels said earlier this week that it took over 2 months for staffing levels to rebound after the last shutdown ended in 2019. So to sum it up, the market's tone feels cautious but not panicked. Investors are watching the Fed, inflation, and economic data closely. For now, it's a story of rotation. Some sectors shine while others struggle. Today, we have some Fed speakers scheduled. The U.S. Treasury plans to sell $25 billion of 30-year bonds, and we'll see corporate earnings from Walt Disney and Applied Materials.